The Reserve Bank announcing that it's cut interest rates by 25 basis points, taking the repo rate to 7.75% and the prime rate to 11.25%. That means indebted consumers are going to get some relief, and that becomes effective from tomorrow. In studio with me, I do have SABC News economics editor Tshepo Mongoai to take us through some of the detail. Tshepo, of course, the Reserve Bank governor, he was first asked, why didn't you go a bit further and give us a 50 basis point cut? And according to him, that was not even on the cards. And that's despite, of course, that news coming through that we got a 2.8% print for October on a year-on-year basis. It wasn't expected by the markets, but they're playing it cautious.
No, absolutely. He mentioned the word we have to be cautious. Although if you look at the trajectory for inflation, they expect it to moderate with the current rate of 2.8%. But he also mentioned that they expect some upward movement in inflation. 2025 meet. That's where they expect some kind of moderation at around a midpoint. So you could see that, of course, the current 2.8%, it's going to be short-lived. It might be going up very soon. And they also said that they expect it to go slightly up to around 4.7%. And of course, even the growth projections, they expect about 2% in 2027. That's quite an interesting one. But they are not blind to some of the risks to the outlook, mentioning one being the energy price, electricity, with this what Eskom is proposing as a tariff increase of around over 36%. It's a bit of a worry, it's a bit of a concern that they have highlighted in their presentation this afternoon.
One of the things that was posed to the governor is this issue of worrying about protectionism. He wouldn't be drawn into making comments about Donald Trump. He says that's not the role of a central bank governor to comment about new leaders. But what he did warn against is the issue of protectionism broadly, that should it take place, there are concerns about the impact that will have on global inflation. And obviously, because we're a small open economy, we would be susceptible to any movements in that regard.
No, absolutely. I mean, if you look at South Africa, for example, there are a lot of some of the basic food items that we import and we rely on from the other countries. And obviously, I do expect, a democracy here will be put to the test if indeed some of this proposal that Donald Trump has been raising during his election campaign will come to the fore. I think one is also around the independence of the Federal Reserve. That will be tested in terms of the history and how we've known the U.S. is that they uphold democracy and independence of their institutions. And it will be very interesting to see how that one plays out. We understand the role of the Fed is independent. It is supposed to decide, make its own decisions without any influence. And that will be interesting to watch very closely. But we hope that there won't be any decision that will affect global trade, because if indeed there are any decisions that affect global trade, developing a small and economies like South Africa will definitely be on the receiving end of such decisions, with inflation likely to go much higher. But so far, I think the picture looks quite favorable, not just for South Africa, but globally in terms of the inflation outlook. We expect inflation to remain benign for the next 2 to 3 years, and that actually would be favorable for the cost of living for South Africans.
Yeah, interesting. The Reserve Bank governor says that he expects, or the MPC expects, headline inflation to be at the midpoint, that is 4.5% during 2026. But at the same time, he really is strongly agitating for a lower inflation target point rather than even a band. It looks like he's looking for 3%. He says discussions are ongoing with Treasury and he's not at liberty to tell us. So then, I mean, if he's got all these forecasts, of 4.5% over the next couple of years, how credible then, is this whole conversation about where inflation is if they really feel that inflation should be at 3%?
Yeah, well, he's been, talking about this for quite some time, that we need to be in line with our peers, and in particular our trading peers. But we know that at times inflation target, its main function could be to anchor inflation expectations. It's more about influencing decisions that people make so that they maintain a much lower inflation in the economy. It's a pity that we didn't have the BR inflation expectations numbers coming out. I'm sure they'll come out next week, which is one of the very important measure that they look at when they make their decisions, or data that they look at. And you could see that inflation expectations, especially from the labor, remain slightly above their midpoint at over 4%. And of course, that's a concern, because it simply means that when employers and employees sit around the table, they're going to ask for higher wages. But we also know that if you look at average wage increases that we've seen recently, they were below inflation. And it's only recently that we are starting to see inflation and wages starting to catch up with the inflation. So obviously,
because
workers,
it's lower.
Absolutely. So workers have been on disadvantage currently amid this high in inflation.